Welcome to Abidi Stock Market Learning. The beginning is most important. Today we are going to cover the two topics in this video. The first one, the myth behind technical analysis. The second topic, the drawback of technical analysis. Let's start with the first section of this video, the multiple myth behind the technical analysis. Myth 1. Technical analysis is only for the intraday traders. Many people think that the technical analysis is only for the intraday traders or the short term traders. However, it is not the case. Truth behind it, technical analysis of stock can be used by the investor too. It can accompany the fundamental analysis of stock. Logic behind it, technical analysis started way before the computer came into the picture. So, investors as well as traders traditionally rely on technical analysis chart for their investment decision and speculation. Anyone can use this chart to understand the right time to enter and exit the market and make the most of their investment. Technical analysis is used by all type of traders and investors on all time of frame from 1 minute chart to monthly chart. Many traders, investors around the globe use the technical indicators like the 20-day moving average or the 50-day moving average for long-term investment. And by using this, many traders have made huge money in stock market. Myth 2. The success rate is low. Another myth about the technical analysis is that many people believe its success rate is low. People have a misconception that the technical analysis yield poor results. However, it is not the true at all. Truth behind it, if you follow the renowned traders, technical analysts, and the investor from across the globe, you will find that many have made the fortune using the technical analysis. Logic behind it, often people lose money due to the greed in the stock market. If you have the proper knowledge of technical analysis and trade in the market practically, then you can easily use the technical analysis to make a profit. Myth 3. Technical analysis provides accurate price prediction of the market. There are against a bunch of inexperienced trader technical analysis who think they can predict the market approximately with the help of technical analysis. Truth behind it, the market can never be 100% predicted. There is always a way of a scope for error. One must be aware that the technical analysis provides the range for prediction and not the exact number. Logic behind it, no one can predict the market exactly. Technical analysis can, however, providing the range of prediction along with the profit margin. But there is no exact number or prediction. Your profit will depend your skills and ability to understand and evaluating risk. You need to understand the risk reward and then invest accordingly. Myth 4. Technical analysis is only for the retail traders. Another misconception about the technical analysis is that it is meant for the retail traders. Truth behind it, however, in reality, hedge fund, investment banks, institutional traders like bank, FIIs, DIIs, insurance company, mutual funds, and investor also use technical analysis. They even have a dedicated team of professional experts in technical analysis. And in institute employ them to analyze the stock and financial instrument using the technical analysis. Logic behind it, large institutions have a dedicated team of a technical analysis to deal with the high frequency trading which is depend on technical trends due to which the scope of error is small. Myth 4. Technical analysis is too simple and easy. Often people think that the technical analysis is too simple and easy. There is no in depth understanding required. Of course, this is not true. Truth behind it, you need to spend quite a lot of time understanding the technical analysis and its application to real life trading. Acquiring a textbook knowledge will not be as tricky as its application. You need to learn the basic and advanced form of technical analysis to do different kind of trades and investments. Logic behind it. Technical analysis is a one tool out of many analytical tools, and you need to associate each of them to get the best possible results. Myth 6. Technical analysis is fruitful when there are more winning trades. It is a complete misconception. A trader can earn more by having fewer win trade as well. Truth behind it. Technical analysis and winning trades have no correlation. Logic behind it. So the success of technical analysis have no connection with the number of winning trades and should be confused. Myth 7. Technical analysis is all about using a ready-made software. It is one of the biggest myths about the technical analysis is that it's completely automated. Truth behind it. Technical analysis is obviously about using the technical indicators, chart, technical tools, but it is not just that. If it was only about the ready-made technical software, then trader couldn't have used technical analysis before development of a computer. Presently, there is hundred of ready-made software which are available in the market, and many beginners totally depend on this software to take a trading decision. Logic behind it. Technical analysis is all about chart, pattern, and numbers, and in the age of technology, all these are made in the digitalization format for ease of use. Myth 8. All technical indicator can be used for every financial instrument. Equity, futures, options, commodity, and bonds all works in a different way. Truth behind it. If you are think that the technical indicators you are using for currency, you can also use it for stock, then you can be wrong. The technical instruments are different, so the type of indicators required will also be different. Logic behind it. You need to choose the right technical indicator for the right financial instrument. Myth 9. Technical analysis can replace a good trader. If automation and technology can do everything, then humankind would have gone extinct. Truth behind it. Some inexperienced trader and haters of technical analysis says that technical analysis is done with automation and can replace a good trader. They forgot that the technical analysis, evaluation of risk and reward ratio, and other associate factors required the human brains. Logic behind it. A way a good trader can evaluate the risk and reward ratio, no automation software can. Myth 10. Technical analysis make a year's a million quickly. There are no free lunch, and we must remember that. Truth behind it. There is no free lunch anywhere, so the technical analysis can help you earn, but only if you use it properly. Logic behind it. It is not a magic wand that makes you a millionaire within a blink of an eye. Myth 11. Technical analysis can predict the future stock trends. Truth behind it. Using the technical analysis doesn't assure the predicted move to be successful, but the probability is very high. Logic behind it. Using the technical analysis, we can know the previous trend and the pattern, but we cannot predict the future trend as the stock market are so volatile in nature, no one can predict the market movement. Now moving to the second section of this video, the multiple drawback behind the technical analysis. Despite the fact it presents a true edge for a trader, technical analysis represents some disadvantage. Those who oppose the technical analysis point out the several problems related to the application of its method. Drawback 1, the failure to know the underlying fundamentals. A common argument is that the technical analysis is aimed at the predicting a certain outcome for a chart pattern, ignoring the reason of movement which are due of the fundamental factors. This is an obvious limitation of technical analysis, and any trader feeling uncomfortable with the handicap should find support through the fundamental analysis. Drawback 2, the lack of scientific objectivity. Although some theories offer a certain objectives to the analysis, other studies may not necessarily lead to an objective interpretation. That is why technical analysis is sometimes referred to be as being more an art than a science. It is also when individual and the mass bias come into the play. This is common argument that point out the lack of a proven thesis. The fact that the trader operator with different time horizon, different expectations and the risk profit make it difficult to find the common approach to the self-fulfilling prophecy. Drawback third, the uniqueness of the pattern occurrences. Another legitimated argument in favor of the unreliability of technical analysis is based on the true observation that past price action upon which the technical method are based does not often repeat exactly the same way. This can lead to the incompatibility in the analysis and to its inconsistency in the method. Chart pattern can be easily misinterpreted. The formation could be established on low volume. Periods used for studying moving average could be either too short or too long. Drawback 4, technical indicator mixed signals. In some cases, one of the technical indicator will show a buying signal and another indicator will show a sell signals. So, some traders use a combination of technical indicators, pattern, volumes and moving average to determine the entry and the exit point. This caused the confusion in trading decision. Drawback 5, technical indicator forecasting accuracy isn't 100%. When a possible entry or exit point for a stock is suggested, it doesn't guarantee a successful trade. Stock may decrease after the entry, the stock can also rise after the exit. Technical indicator may show the signals. Different traders may interpret exactly the opposite. Interestingly, both traders will find legitimate confirmation of his conclusion and even quite logical. Drawback 6, contradictions of technical analysis opinion. One technical analyst opinion may contradict another analyst opinion for the same stock. Technical method that are used to analyze the stock can vary from one analyst to another. Drawback number 7, intrinsic or the fair value is based on assumptions. Any changes in the key fundamental factor such as growth can greatly alter the achievement result of the analysis. Being useful for evaluating an undervalued company or the company with the high future growth prospects. It doesn't provide us with any kind of information that would help the timing, the entry, and purchase of the assets. Last but not the least, the drawback 8, the time lag in forex trading. Unfortunately, the forex trading required a fast reaction. In adding to the fact that the signal can be delayed, the trader may also be late in decision. By the way, regarding the lag, the drawers theory is often criticized. That's it for the video. You should take your time to understand all the concepts discussed in this video. Take your notes and go back from time to time to review the strategy which has been shared with you. Please subscribe to our channel and click on bell icons to get the notification for our upcoming videos. Please like the video and provide your comments if any. If you feel the content of the videos are knowledgeable, then please share this video with your colleagues and friends. Thank you for watching this video.